Hi, in the last videos we talked about three ways of every crypto movement. We have accumulation or range, uptrends and downtrends. Professional crypto traders are using this price action to make money. And there are three ways to make money. One of the ways is to buy breakout or breakdown of any support or resistance line, previous range, or any previous consolidation. Once the price breaks out or breaks down any level, it's starting a trend. The price is not going in one line, it's making ups and downs. All these downs are called pullbacks, and pullbacks are another chance for traders to make money. Third way that professional traders are using for making money is buying or shorting reversals. Reversals are direction-changing trades, where traders are trying to short the highest point or to buy the lowest point of a trend. In this video, I'm going to talk a little deeper about two ways to buy breakout or to short breakdown. There are different breakout and breakdown patterns like head and shoulders, cup and handle, different triangles, and others. And all these patterns are very often forming close to some support or resistance line or close to some of the moving averages. In this example, I will take Ethereum, which price right now is around $3,300. And let's say that you noticed cup and handle formation forming. Here you have an example of cup and handle formation. And the first thing that you should do when you're buying or shorting cryptocurrency is to find out where your stop is. Let's say that you put your stop at the previous swing low. Then you should count where should be your profit. This is 1-to-1 risk to reward, 1-to-2 risk to reward, and based on the strategy that you use, people usually take profits when they reach 1-to-2 risk to reward. And 90% of the books about trading and investing are telling you to buy a few cents or few dollars, depends on the coin price, above the resistance line. So if the price of Ethereum is $3,300, you will set a stop market buying order at, let's say, $3,305. The thing is that when you have a breakout, you have a big momentum and price is moving very fast. And you're not going to get it for $3,305. You could get it even up to $3,317. And that brings the new problems. Let's say that you had stop at $3,280. Your stop is not $20 anymore. Now your stop is $37. Another problem is if you want to reach 1-to-2 risk to reward, your profit target is changing to here. One of the ways to avoid this to happen is to use stop limit orders. In that way, you're limiting how much you can pay for the coin, but you can also lose a lot of opportunities. What you cannot read in the books is what actually professional traders are doing. And what professional traders are doing is that they actually buy before the breakout happened. And there are many benefits of doing that. Let's say that you bought for $3,297. Your stop is now just $17, so you're getting your stop smaller. Also, your profit target is closer. You don't need to wait for the levels where other traders are waiting to take their profits. You are in big advance. I'm not a big fan of trading breakouts. I prefer for the price to break out, comes back, and now resistance line becomes a support line. And when I see the signs of recovery, that is where I'm buying. We are going to talk about how to buy pullbacks in some other video, and I hope that in this video I helped you to better understand how to buy breakouts. If you're planning to short breakdowns, use the same logic, just vice versa. Thank you for watching, and I'll see you in some of the next video.